Hi, it's Gillian Seguin, Associate Wealth Advisor with Reyes Group at IA Private Wealth again with a Q3 commentary in 2024. Last quarter, again, we saw inflation starting to stabilize and things were starting to look a little bit cautiously more optimistic. Interesting to note, China started to support their economy, their stocks, their real estate, and general economy as a reaction to the 50 basis points decrease that we saw out of the Feds in the US to their interest rates. So time will tell whether that actually works and holds, but a really impactful change to the rest of the market and the world if it does take effect, as China is one of the biggest economies in the world. Financial markets, we continue to see strength in technology, renewable energy, and in the last week or two, we have seen a run on oil as the conflict in the Middle East starts to ramp up. In Canada, 4 of our 6 banks had impressive results, and that certainly bolstered the dividend paying areas of our economy. So namely the banks, utilities, and telecoms. In fact, we had a 16% increase in the banks in the last quarter. Pipelines, that is, have gained 14%. Telecoms have gained 11%, and utilities have gained 13%. All in all, we saw the Toronto Stock Exchange up just shy of 10% in Q3. South of the border, we again see that technology and healthcare push. We'll see whether the Feds have addressed interest rates and the inflationary environment in time. We did see a significant bump in the markets after they did do that 50 basis point cut, and we anticipate probably 2 more cuts before the ball drops for 2025. In the US, we did see, again, gainers. So the Dow rallied 8.7%, NASDAQ 2.8%, and the S&P 500 was up yet again with those technology stocks almost 6%. Looking forward into the final quarter of 2024, the 2 hot buttons, of course, that we are watching is those tensions in the Middle East and the US election on November 5th. I think the best case scenario there is that we see a clear winner when we wake up on the 6th, and the Feds are scheduled to meet on the 6th as well. Markets right now are polling as though we'll have a divided government. So House will take the Democrats will take the House. The Senate will go to the Republicans. And at this point, Harris is looking to be the next president. All in all, again, as we get into the close of the year, we'll see some tax loss selling. We've had a really strong year in the markets, so anticipate some tax loss selling if we do get a dip. But as I've always said, volatility is not a bad thing. It gives the market a chance to normalize, and it gives those of you who are waiting for that dip to buy an opportunity to participate in the upside that we could see in 2025. So we'll see you in December, or actually in January. Thanks for joining me today.